Okay, well, great. Welcome, everyone. For those I haven't met, my name is Janine Benner, and I'm the director of the Oregon Department of Energy. Thank you so much for tuning in today to learn more about ODOE'S agency request budget for the 21-23 biennium. Before we get started, a few housekeeping items. Hopefully, most of you have participated in virtual meetings by now, and this should be a review. You are all designated as attendees in our WebEx meeting, which means that you're on mute and we can't see your video. But we do want to make sure that you have an opportunity to ask questions and make comments. So there are a number of ways that you can do that as we go along. You can use the chat function, which if you go to your screen is the little, I guess, chat circle there. And you can select your chat to go to all panelists. So Jenny Kayla, our communications director, is going to be monitoring the chat box, and she'll either respond to or ask your question to the presenter if you do it that way. You can also use the raise your hand function, and we'll call on you when we pause during the presentation. The raise your hand function will appear if you look at the participant view. I think there's like a little tiny hand over to the side. And then we understand that some people might be on the phone and unable to use the chat box, so we'll be pausing and unmuting everyone towards the end of the meeting to give everyone a chance to ask questions or make comments. And finally, we will also be monitoring the askenergy@oregon.gov email inbox if you'd prefer to email your questions. And we'll try to do this in real time, but the state has an overactive spam filter, which means it might take us a while to get to it might take your email a while to get to us. And you're also welcome to send questions or comments to that email address if they occur to you after the meeting is over today. So we'll have that open and we'll post all of those questions and comments on our website next week. So please submit any comments you have by July 20th. Again, the email address is askenergy@oregon.gov. So today we'll start with some brief remarks from me, and then I'll turn it over to Kathy Connolly, our Assistant Director for Central Services, to share information on the budget. And she'll take questions throughout, but we'll also have a number of other ODO staff on the line to answer questions as well. So for those of you who don't live and breathe state agency budgets like Kathy and me, just a quick reminder on how the process works. What we're presenting to you today is ODOE'S Agency Request Budget, or ARB. And this budget was developed according to the process prescribed by the state. Happens the same way every biennium, and it started with a current service level budget, an estimate of continuing to administer legislatively approved programs into the next biennium. So that's the CSL, and to that CSL, we add policy option packages, which provide additional resources to the agency to enable us to do our work. Like all agencies, we are also required to submit a list identifying possible budget reductions to the current service level when we submit our budget. And we'll be submitting all of this to the governor and DAS on July 31st. The materials that we'll present today, which are also on our website, and if you're following along, you can find them by going to the About Us tab at the top of the menu bar on our website and clicking on Budget. These materials demonstrate how we arrive at our agency request budget, what the money is used for, how our programs and activities are funded, and what the projections are for the energy supplier assessment if the legislature chooses to maintain the current service level and add our policy option packages. We will walk through our budget program by program, and please feel free to ask questions during the presentation. Again, submit them through the chat function to all panelists or raise your hand. And we'll also try to leave time for questions at the end. And I'll also say if there is additional information that you would like to see about our budget that isn't in this presentation, please ask. We'd be happy to provide you whatever we can and as much information as you'd like about our budget. Last month, we presented our current service level budget and our draft policy option packages to the Energy Advisory Workgroup members. So thanks so much to those of you who participated in that conversation and offered feedback. Some of what we talk about today will be a repeat for EAWG members, but this presentation will go into greater detail, especially on the ESA piece. And before we jump into next biennium's budget, I do want to remind folks of how ODOE's budget played out last time and share some history for those who weren't following it. So you may recall that ODOE presented our 1921 agency request budget to this group, the ESA payers and the public, in July of 2018, and then we submitted it to the governor at the end of July like usual. But when the governor's budget came out at the end of November, it did not include a budget for ODOE. Instead, a new agency was proposed that would have included ODOE'S programs. When this idea didn't advance, we worked with the governor's office and the legislature to pass a standalone ODOE budget, which included two significant items. First, it cut staff and services at the agency. There was a net loss of 8 positions from our request budget, and it reduced budgeted services and supplies. Second, the budget included a budget note requiring ODOE to report back to the legislature during the short session on the agency's existing programs, a review of agency administration, the level of internal support versus services that could be provided through DAS, a review of the agency's indirect rate, and use of the ESA. Now, I made that presentation to the Ways and Means Committee on February 24th. There's a recording of it and the PowerPoint presentation on our website, and I encourage you to take a look if you're interested in any of those items. We went into a lot of detail. So a few other things I'll mention before Kathy dives in. First, I want to acknowledge how difficult the budget climate is right now. You're all probably aware in the most recent economic forecast for Oregon, there was a $4.4 billion decrease in the revenue projected for the 21-23 biennium as compared to the previous forecast. In addition, I know that COVID-19 is taking its toll economically on all Oregonians, and some of you who pay the energy supplier assessment are being especially hard hit as the economy uses less energy and some people struggle to pay their energy bills. The budget that we're talking about today is for next biennium, which starts in July of 2021, but COVID-19 is already impacting the state budget. We're realizing a statewide revenue shortfall of $2.7 billion in the current biennium. The governor and the legislature are working to figure out how to reduce expenditures to deal with the reduction in revenue, and this will likely impact agency budgets this year. For this biennium, ODOE is reducing expenditures where we can. We've held positions vacant or slowed down the hiring process to refill vital positions. We've also seen a reduction in expenses associated with staff travel and training opportunities. And as Kathy will show you, by using these savings and reducing our ending balance, we were able to avoid an ESA increase this year on your most recent bill. If the state takes actions to reduce expenditures in the area of personnel expenses, such as furloughs or pay cuts, this would impact ODOE's budget as well. But I want to be clear that those are not the type of actions, those types of actions are taken at the statewide level and aren't something that individual executive branch agencies can do on their own. Second, I want to acknowledge up front that the agency request budget for the next biennium that Kathy will present in a minute would result in an increase in the ESA. Unlike last biennium when we brought you an agency request budget that decreased the ESA, the cost of delivering our current service level has increased such that we would need to increase the ESA to fund the agency to do its current work. Kathy will share more about why this is and what the numbers are, but in short, it has to do with decisions made at the state level and not by ODOE. Now, I understand that this is counterintuitive. The agency is smaller than it was, but would need more in revenue to continue our current services. And I also recognize an increase would come at an inopportune time for ESA payers. I know that many of you are facing budget challenges, and an increase in the ESA to pay for increased costs of our services doesn't help. So I want to make sure that you understand that I'm not up here or sitting here today telling you that the ESA is going to increase. I'm telling you that the agency's request budget that we're submitting to the governor at the end of July projects an increase in the ESA to meet current service levels. And this is the beginning of the process. As our budget moves through the process, we'll be working with the governor and the legislature to look for opportunities to reduce the amount of ESA that we need to fund the agency. We've already shifted funds where we can, and you'll see that in our budget, we've been able to take advantage of a slight increase in our federal funding to reduce pressure on the ESA. Also, our agency's policy option packages propose shifting some programs that are currently paid for with ESA to the general fund, which would result in a savings. Another thing I want to make clear, I want to make sure you understand, is that we did not and we will not propose shifting any new programs onto the ESA. Finally, as I mentioned earlier, any actions that the state takes with respect to personnel like furloughs would impact ODOE and would decrease our expenses and therefore the projected ESA. So bottom line, ODOE's agency request budget projects an increase in the ESA, which is due to an increase in the cost of our existing programs. And the budget will go through many changes before it gets passed by the legislature next spring. And with that, I will check with Jenny to see if we have any questions, although I imagine most of them will be answered by Kathy over the course of the next hour, but just pausing now just in case.
No questions so far.
All right. In that case, Kathy, go ahead. Don't forget to unmute.
Okay. Hi, I'm Kathy Conley, Assistant Director for Central Services for the Oregon Department of Energy. I want to tell you in advance that I've worked on state budgets for 15 years in 2 different states at both executive and agency level. So if I drop into budget speak or I'm using way too many acronyms, I apologize, and please do ask questions to clarify what I am saying. So to recap, these are the stages of developing a biennial budget in Oregon. Once the current service level budget is developed, this is the estimated cost to continue our programs for the next biennia. We move to agency request budget by adding policy option packages to that CSL. We then hand that off to the Chief Financial Office and the governor to work with the governor to develop the governor's budget for ODO. We hand it off on July 31st. The governor's budget is due around December 1st of each even-numbered year. Then around February 1st, the legislature begins its long session when it will consider all agency budgets. They are passed separately, but generally there are end of session bills that can impact agency budgets, even the ones that are already closed. So the legislature usually finishes around July 1st through the 10th of the odd numbered years. This is a slide that we showed you last in 2018, and it's to remind you about, again, walk you through the state's budget process and timeline. In March, we began developing the 21-23 budget, which will begin on July 1st, 2021, a year from now. We started with our 2019 legislatively approved budget, which, as Janine noted, was substantially reduced from 17-19. It also reduced the energy supplier assessment by $1.4 million over the previous biennium. At budget kickoff this year, which was when March 5th, it occurred, we were not directed to plan a cut budget or a CSL budget. We were reminded that revenue and economic forecasts were volatile and moving downward. Beginning in May, the base budget is evaluated and adjustments are made to revenue, debt service, and positions. The base budget includes cost of living adjustments and merit step increases that are negotiated and approved for all state agencies by the Oregon Department of Administrative Services, and these costs move forward into the current service level budget. This piece had a significant impact on our budget for 21-23, and so I want to go into some detail. Last summer, when the state negotiated pay increases for all state employees, and this is a time when those additional personal services costs are fully hitting our budget. Costs of positions include 24 months of all the personal services increases that rolled in incrementally during 2019-21, the current biennium. This is all calculated by the ORPIC system for all agencies. The ORPIC system is the Oregon Position Control System that is linked to our budget system. I would note that part of those adjustments occurred during this biennium and therefore are baked into agency costs as we move forward. ODOE'S salary pot, estimated by DAS Chief Financial Office for this biennium, was $1 million in expenditure limitation. However, recognizing the financial pressure that utility companies were under, ODO elected to absorb that increase this biennium. So the 2020 assessment, which we just sent out to you and you paid this month, was in total equal to our 2019 assessment, even though our costs went up by the salary pot amount. We then move to, once we establish our base budget, we then move to developing the current service level budget. CSL includes the estimated cost to continue administering legislatively approved programs in the next biennium. That's what it is defined as in the budget manual. The next 6 circles are to represent the required adjustments to reach the current service level budget. This includes recalculating our vacancy savings, which is an anticipated level of savings the agency will experience during normal turnover. It's actually a reduction or a negative number in the personal services category. We do any temp and differential inflation. We phase in or phase out any funding we needed. In this biennium, we did have a phase out. We apply all of the inflation factors that are given to us by Chief Financial Office on continuing programs. We complete any fund shifts that we propose to do and any technical adjustments. Fund shifts and technical adjustments are generally required to be zero-sum moves. The budget cannot be increased or decreased by those packages. I would like to highlight some of our current service level changes. We were required to phase out funding for the solar rebate program because the legislature provided only one-time funding in the 2019-21 biennium, and we anticipate we will distribute that funding before the end of this biennium. The program, however, statutorily runs through January 2nd of 2024, so we are proposing a policy option package for the next biennium. I want to highlight that in the inflation category, many of the current service level budget items were given to us by DAS. The state government service charge is a number provided to us by DAS. This, however, is very likely to change at governor's budget and at legislatively adopted budget, depending on the budgets of the agencies who are involved, who are part of that state government service charge. The numbers on inflation, such as regular inflation, professional services, attorney general, are also given to us by DAS, but some of those surely will change during the budget development process as we move through governor's budget and LAB. ODO is projected to have an increase in our federal state energy program grant over what was budgeted in 1921. And rather than propose new props with that funding, we decided to fund shift off of other funds and onto federal funds to counterbalance this increase in our personal services costs, which we knew would be significant in the 21-23 biennium. So we used package 50 to fund shift $456,000 off of other funds, including ESA, and onto federal funds in the planning and innovation program for the new biennium. And finally, we did do some technical adjustments to align our expenditure limitation in very small categories with where the funds were actually being spent. So now we've reached our current service level budget. The final action is to add in any of our policy option packages. Which we have 3 POPs in our agency request budget, which taken in total will not increase ESA, and we'll discuss those more in detail later. And we arrive at our agency request budget. So let me pause there and ask Jenny if there are any questions.
Yes, just a couple of things. A couple of folks expressed that it would help to extend the comment deadline, and we are happy to do that. We will extend to next Friday. We had mentioned the deadline when we sent the meeting notice, but it's understandable if folks didn't quite see that. And obviously it helps to have the presentation before you make additional comments. So by next Friday would be really great to the askenergy@oregon.gov email. I did also have one other question regarding the 2019-21 budget, and I don't believe we have information on cuts for that yet, but one other person asked if there are any changes to the Oregon Global Warming Commission budget from ODO.
So the Oregon Department of Energy supports the Global Warming Commission. The only item budget for that is part of a position in the planning and innovation budget, and that that position will have the same sorts of increases as all other positions, but otherwise there's no specific increase for that. Janine, would you like to add anything?
Nope, I think you said it. No change with respect to the Oregon Global Warming Commission in ODO's budget this year.
All right.
Great. And then one other comment, Kathy, a couple of folks have mentioned seeing the attendee list, and it's just a function of WebEx that apparently the attendee list isn't viewable to everybody, but we are going to capture all of the attendees and we'll include that in notes and upload it to our website.
Oh, cool. Thanks, Jenny.
Okay. I'm sorry, I just saw one other question, and I believe we are getting to it. There's a question about if we will be showing ESA changes for each program in the 21-23 proposed, which I believe you will get to.
We will be showing the projected percentage of ESA in each program for the 21-23. Yes.
Okay, thanks.
All right. So these graphs show you ODOE's agency request budget for 21-23 by program division within the department. At the Energy Advisory Work Group in June, we showed you CSL numbers. Now I'm showing you agency request numbers, so they will be different. On the left is our entire budget, which is dominated by the small scale energy loan program in the Energy Development Services Division. That's that orange part. The majority of self-funding is a transactional in and out. Our self-borrowers make payments on their loans, and we use that revenue to pay off the debt service on our self-bonds. On the right is the operating budget for the department. The operating budget includes personal services and services and supplies, and it reflects the cost of day-to-day operations here at the agency. It does not include the debt service payments or special pays. So compared to 2019-21, our overall budget is smaller. But the reduction in our budget, our overall budget, is being driven by a reduction in self and lottery fund debt service we have in EDS. ESA payers don't participate in those programs. They don't pay any part of that program. So when expenditures go down, they aren't impacted by those reductions. Compared to 19-21, our operating budget, this side, the right side, is going up because of POPs, the majority of which are going to be funded with general fund, but also because of increases in personal services that were made back in base budget that I've already described to you. These are your categories, budget categories that are used by Energy, Chief Financial Office, and Legislative Fiscal Office to create the budget. We provide more detail about generally what is in these categories, but if you have questions, do not hesitate to ask me. This is ODOE's biennial budget history over a 10-year horizon. The gold and the orange, the gold is bonding authority, the orange is debt service bars, reflect that small energy loan program expenditures that have to do with the SELP program. The purple is the stark purple is the lottery fund debt service. This is used to pay for bonding that supported the Clean Energy Deployment Fund and the Energy Efficiency and Sustainable Technology Program, both of which are old programs that are no longer active. Gray is the federal funds limited. In this early biennia, we still had federal stimulus funding, which ended during the 13-15 biennia. Since then, federal funds expenditures have remained relatively steady, although, as I mentioned, we are seeing a small increase in our state energy program grant. These 1921 bars do not include the federal grant that we received from the U.S. Department of Defense for $1.1 million because the legislature approved our asking for the grant. They have not yet passed the additional expenditure limitation. We have divided other fund limited into two categories: expenditures that were or are projected to be supported with the ESA, which is the turquoise bar, and the balance of other fund expenditures, which were budgeted using fees for services, grants, and the indirect rate. That is the red bar that you are seeing in the columns. So general fund appears in 21-23 to support two of our policy option packages. That's why it's in this biennium. During the 1921 biennium, ODOE received general fund debt service to backfill a cash shortage in the SELP program, which was projected to continue into 21-23 and 23-25. However, this biennium, ODOE completed a bond refunding and has reduced program costs during the biennium, so we will not be asking for general fund debt service in the 21-23 biennium. At the beginning of this biennium, we projected SELP would need $3.8 million in general fund debt service to cover the cash shortfall. Instead, we will not be requesting any general fund debt service. So this is, again, a very general description of where our revenue comes from. We've historically been another fund in federal funds agency. However, having received general fund in the current biennia, we are again requesting general fund to continue the solar rebate program and to support some of our new work in the area of radioactive waste, in the area of monitoring where radioactive waste goes. So this brings us to our operating budget revenues. The operating budget expenditures. This is about our revenues. So just moving around the ring, federal funds contains the Hanford grant and the State Energy Program grant. In the other funds limited category, that's a number of things here. It's the energy supplier assessment, energy facility siting fees, public purpose charges for services includes the public purpose charge, as well as funding from Energy Northwest, the Northwest Energy Efficiency Alliance, and Northwest Power and Conservation Council. Although this is funded by the Bonneville Power Administration, which is a federal entity, in our agency, this comes in as other funds. The solar and storage rebate program policy option package that we are requesting comes in as special pay as general fund, but then it's transferred to other funds. So it's actually included within the other revenues category. So this is the energy supplier assessment. And as you can see, we are projecting that it will be $15.64 million higher. This will be $15.6 million in the 21-23 biennium. This is higher by 1.66 million or 11.9% as compared to the 2019-21 biennium. This increase is primarily because of the increase in the cost of personal services associated with the statewide cost of living and merit step increases, as well as other inflationary pressures. So that's the big picture. At that level, I'm talking about agency-wide information. Before I begin talking about the agency program and sub-programs and proposed POPs, does anyone have any questions over what we have gone over so far?
Yes. Okay. Bear with me for a second. I have a flurry and I'm trying to keep them in, keep track of them. So a question I think for Janine is there's a question about the Oregon Global Warming Commission, and it has new duties under the Executive Order 2004 for climate change, and wondering if there's a POP involved or something about budget.
Thanks for that question. The Oregon Global Warming Commission did not request additional funding to implement the executive order. I think the executive order included a number of directives to the Oregon Global Warming Commission that they felt they were able to do under their existing authorities and funding. The same can be said for the Oregon Department of Energy. If it were a different budget climate, I think we might have proposed a number of policy option packages to help us do more to facilitate greenhouse gas emissions in the state. But with this budget climate, we did not feel it was appropriate to put forward a POP. However, if you look at our report that we submitted to the governor on May 15th, outlining what we were doing to implement the executive order, it gives you a good indication of the actions that the department is taking under our existing funding and authority.
Great. And for folks who are submitting questions in the chat, some of them are coming directly to me as the host, which is fine. You can also select under the to send it to all panelists, and then all ODO staff will be able to see your questions, which might help a little bit. Let's see here. We had a question about ESA history, and I let that questioner know that we're getting to history shortly. And so if you have further questions once we've gone over those slides, please let us know, and we're happy to clarify. And then I just got another question, I think clarifying that the proposed ESA in the next biennium to the current one, is it an 11.9% increase?
That's correct, Jenny.
Right, so yes, that is correct. Let's see. I think those are all of the questions there. Returning to the previous question about who else is in attendance at the meeting, I'm going to go ahead and read who is signed up as an attendee. There are a couple of phone numbers, and so We won't know who those are, but I'm happy to read the names. And I apologize in advance if I mispronounce anyone's name. There's an Alex Scheibel, Angela Crowley Koch, or Koch, pardon me, Danelle Romaine, Erica Ewan, Erica Hirsch, Helen Kennedy, Jennifer Jolly, Lena Fallert, Maggie Emery, Mary Knight, Michael Williams, Michelle Miller-Harrington, Miles Pengilly, Mariah Aglietti, Nate Rivera, Peggy Lynch, Rebecca Carey Smith, Renee Klein, Theodore Case, and Tom McBartlett. And we will record these attendees and include them in our meeting notes, which we will upload to the website.
Thank you, Jenny.
Sure thing. I'll keep an eye on further questions.
Thank you. Okay, so I'm going to begin by reminding you what our agency looks like. In the center are the divisions that make up ODO, and on the outside are the tan boxes, which identify the boards, commissions, and councils that we work with. So when we talk about budget programs, we are generally talking about our divisions. Nuclear safety and emergency preparedness, energy development services, energy facility siting, energy planning and innovation, and then central services and director's office make up the administrative services division. These are the estimated ESA expenditures for the 21-23 biennium for the entire agency. This information will be repeated for each program and for each activity underneath each program that we have. So let's discuss the information that the table contains. You'll see that the 17-19 biennium column are the actuals for that biennium. The 19-21 is our legislatively adopted budget for that biennium. And the next column is the total funds anticipated expenditures for our 21-23 agency request budget. The next column is the estimated ESA percentage of total expenditures for the agency, program, or activity. And then the so that across this, whether it's the division or the activity, or in this case, the agency as a whole, approximately 20% of these expenditures are attributed to ESA. In this column, you are seeing the actual dollar amounts that we anticipate or are projecting will be paid for by ESA. Then we've simply split them in half because we do assess you on an annual basis. So you see the first year of the biennium and the second year of the biennium. So specifically addressing the information in this table, as opposed to any the ones that are coming up, our total budget is less, as we mentioned before, is less than it was in 1921, and the estimated contribution of the ESA is about 20%. This is an average for the agency. Any particular budget code category could have a different percentage. So it may be different in personal services, although I have to say I think personal services are really the easiest to calculate, but particularly in services and supplies, special payments, debt service, you will see it's not 20%. For instance, in debt service, ESA pays none of debt service. So it's not 20% there. Special payments, we have $8.9 million in special payments in our agency request budget, but we are forecasting that ESA will only pay about $20,000 of those. In these S&S categories, it becomes much more difficult to forecast because they are much more discrete, they are much more volatile, they change, so that is more difficult. But that is how you should read the table. The ESA percentage is a percentage of the entire budget that you were looking at next to it in the column to the left of it. So we're going to begin with the Energy Planning and Innovation Program, which covers a wide area of responsibility. I know many of you are familiar with their responsibilities, but I do want to note that if you have questions about the work of the divisions, all of our assistant directors are available to respond to your questions. I do want to highlight a couple of changes in this division. The governor's So the governor's executive order on greenhouse gas emissions has been added to this program. But our work within the executive order closely aligns with our existing mission and workload, and we are not seeking any budget adjustments to address this change. Another big change is that we have moved the Northwest Power and Conservation Council positions to this program. Previously, they were funded in our administrative budget. Again, that is reimbursed. We are reimbursed for those positions by Bonneville Power, and so it does not impact the ESA directly. We also transferred a communications position to this program from the Administrative Services Division because there was a substantial workload associated with data visualization and a number of other things, and it was more efficient to embed the position right here in energy planning and innovation, which we have done in the past in other divisions. So planning and innovation has 24 staff, which is about 30% of ODOE'S employees. This program has 3 detailed budget structures, sort of an activity level budget structure: energy efficiency and conservation, technology and policy, and now new one, Northwest Power and Conservation. Our employees in this division have deep technical knowledge and expertise in their areas. And again, if you have any specific questions about the programs, our assistant directors can answer them. This graph shows P&I's budget broken down. So this is at the division level, P&I's budget broken down by program and activities of the division. And on the right side, it shows, so this is Energy Technology and Policy, Northwest Power and Conservation Council, and Energy Efficiency and Conservation. This is their percentage of the total division budget. On the right is an estimate of the revenue percentages based on the expenditures in these areas in previous years and a projection for what we expect to spend this biennium. So ESA pays, we expect about 64% of this budget. Federal funds will pick up 14%, and the other funds that I listed in an earlier slide will make up about 22% of this budget. So this is, again, our ESA detail for the division as a whole, planning and innovation as a whole. You'll note the ESA percentage is about 64%, just as it was on the prior budget, the prior slide here, 64%. But this shows you the dollar. That amounts to about $8.1 million. Their total budget is $8.1 million. ESA amount is $5.2 million. Again, split apart. So I do want to comment that, so we have personal services here. Services and supplies, we broke out a few categories: travel and training, professional services, and AG fees, primarily because I understood in the past there was interest in these categories. So we selected them again. The general office and ops is really the balance of this services and supplies category. We just put it all into one. Again, you can see that this budget is impacted not only by the inflationary costs that we've discussed in personal services and other categories, but again, you're seeing in their total budget that transfer of the Northwest Power DCR, that category, that budget grouping, and the additional position from admin. So this, we have broken it down into the sections or kind of budget activities for this division. You'll see each activity has a different percentage of ESA used in their operation. This reflects the work they do and the other sources of revenue that are available to ODOE to support that work. So energy efficiency and conservation, their expenditures are about 45% supported by ESA. Energy technology and policy is much higher at about 93%, and Northwest Power and Conservation is 0. So I'm going to leave it at that, but I will anticipate questions.
Kathy, this is Janine. We have a couple people asking about the ESA percentages for each program and how they've changed over time. And I actually don't think we have that in this presentation. It wouldn't be that hard to get, I don't think, but I also don't know that there's been a lot of change in what percentage P&I uses of ESA over time. Maybe it's gone down a little bit as our has fluctuated as our federal funds come in, but is that accurate?
So I would say in most cases that's true. I don't recall noticing in this budget any tremendous shifts. The reason I highlighted that fund shift in P&I was because it really was the most significant change in any of the divisions. So we did a very similar thing for ARB in the 2018. So the comparison we have is what we presented to you in 2018 versus what we presented to you now. But I don't know that, and we could certainly provide that, of course we could, but I don't know if that's really all that useful at this point, given that, I mean, that's a long distance. Now, Janine, are they asking for more of the historical, because we do have a history of we will discuss with them a history of the energy supplier assessment at the end.
Let's go through that and then see if there's questions, further detail that people are seeking at the end, and we can provide that.
All right.
Yeah, thanks. Jenny, are there other questions?
Just doing a quick run through. Let me see here.
While you're running through, I see a clarification on that question. If the ESA is going up 11.9% overall, we need to understand where and how it compares to last year, program by sub-program. So that's something that Kathy will get into a little bit further detail, but that really has to do with personal services costs increasing significantly. It's not, and that's spread throughout the agency based on number of FTE. So it's not, that increase is not associated with one program or another, or the change in percentage of how programs rely on the ESA. That's really the overall increase in personal services associated with those merit service adjustments and cost of living adjustments that were made at the statewide level.
Right. I think, yeah, that is absolutely true. I mean, it's not, and I think I would encourage you to compare the 2019-11 LAB at personal services, and then go down and compare the total between, total expenditures and the ARB total expenditures. And what you will see is that, yes, services and supplies, AG fees, special payments, and in some cases debt service will change between the two. But the majority of the change is occurring up here in personal services. And so, when you ask where is, what is impacting the increase in ESA, in virtually every one of the divisions that has ESA, that's what's driving it. It's personal services. What side am I on? 21. Okay, the next program is Energy Development Services. I'm going to move through this a little bit quickly because it does not really directly impact ESA, although it does have an indirect impact. So the staff in this division support the SELP program by assisting borrowers in managing the bond program. As I mentioned to you, we successfully closed a SELP refunding in 2020 that saved ODO $2.4 million and our borrowers $2.3 million in debt service costs. There's also funding for the energy incentive programs, which still are legacy programs, have a workload associated with outstanding grants and tax credits during the next biennium. You'll note on the left side, the solar rebate program is grayed out. As you recall, it was phased out at our current service level, but we are proposing a POP to extend the program, and if it continues, it will be in this program. We have in our agency request budget 6.5 FTE. That's about 8% of ODOE'S employees. And this includes the 2.5 staff for solar rebate. And I would just note the division administrator appears in I'm the division administrator. So it appears in the central services budget. There's no separate one here for EDS. This is our budget breakdown. No surprise, EDS's budget is dominated by the SELP debt service on the left side and SELP loan repayments, which is what pays the debt service over here on the right side. Energy efficiency financing actually just reflects the lottery fund debt service we receive, and the energy incentive programs include RED grants and the legacy programs. You'll notice on this side a slice of the general fund, which is the revenue source to support the solar rebate program. This is the EDS detail, the EDS program level detail for ESA. As you can see there, ESA is not projected to contribute to the energy development services in this biennium. I think historically there may have been some contribution, but it did not contribute in 1921, or we don't project it in 21-23. EDS also has activity level budget structure. So energy efficiency financing, energy incentive programs, small scale energy loan. Again, contributions are consistently 0. But this brings us to our first policy option package, or POP, that we're proposing. It is simply an expansion of our 1921 one-year activity for the solar rebate program into a full biennium. We are proposing $3 million of general fund for rebate. This biennium it was $1.5 billion, and the cost of operating a full program would be approximately $800,000 for the biennium, which would cover about 2.5 FTE. In this biennium, the program costs were about $500,000 for the one-year program. We are not requesting ESA for this POP. In fact, the impact of this POP will reduce ESA because general fund will share in our administrative costs. We are proposing this POP in a time of fiscal constraint for 3 reasons. It's an extremely popular program. We have reserved rebates or are reviewing applications for all of the $750,000 in low and moderate income residential and low income service provider pool of funding. This is a space that has been very difficult to encourage installation of solar systems, but successful. We have also reserved rebates of about $570,000 in the non-low and moderate income residential pool of funding. We have outstanding requests for funding that exceed the available funding in both pools. In addition, we believe that this program supports the goal of reducing greenhouse gas emissions in the production of energy. And finally, this program creates and sustains jobs in the solar industry at a time when economic tools, recovery tools are really needed. Do you have any questions about the projected revenues needed to fund energy development services budget, or what portion of that we estimate will be allocated to the energy supplier assessment? I'd be happy to answer any.
Yes, Kathy, we have a couple of questions that have come in. I'm going to start with one that is not specific to energy development services that I think is probably for Janine. And that is a question about the development of the 2021-23 budget and how it related to the June forecast, revenue forecast, and whether or not it adjusted the budget related to that reduction.
Yeah, thank you for that question. Kathy touched on this a bit at the beginning, but we develop our budget according to a very prescribed process from the state, from the Department of Administrative Services, and that is not a zero-based budget. It's a current service level budget to which we add policy option packages. So we were not told at the beginning to develop a cut budget. We were told to do what we normally do, which is to start with our current service level budget. Our policy option packages, I would say, did take into account the fact that we're anticipating lower revenues from the entities that fund our services, which, except for the solar rebate program, is not general fund. So we proposed policy option packages that would actually reduce the energy supplier assessment. We did not propose packages that would increase it. That being said, that's how the process works, and then the legislature and the governor will certainly take into account the expectations for next biennium's revenue forecast as they determine the final budget.
Great. And then Kathy, we have a couple of questions specific to the solar rebate program. The first was that somebody was asking for more information on why 2.5 FTE are needed for the solar rebate program, and now that it's up and running. If you can explain who the 2.5 FTE are.
Right, there will be 2 office specialists who are the people who are actually handling the rebates. So they do a wide variety of, so they work in Power Clerk to review the applications for a rebate and to approve the reservations. So you apply for a reservation for a solar rebate. So they review those applications for reservations and approve, or in some cases ask for additional information. Then once they are approved, we assume the contractors go out and do that. So then a certain number of those, once they are completed, the contractor asks that the rebate be issued to the contractor. At that point, we are required to, we don't have to inspect every project, but we do have to inspect a certain number of these projects, which we have a criteria for. So the same staff is generally the staff that goes out on those inspections. And so those are the 2 main positions. There is, I think you have to recognize the level of volume. These are relatively small. The maximum is $5,000 for a residential project, and most of our projects are residential. The maximum is $30,000 for a low-income service provider, but you know that's not the bulk of what the projects are. So there's a lot. We have many projects within that $3 million. So the 0.5 is actually the program lead for the staff. They would be doing, you know, primarily managing the workload to assure that things are moving forward. If we have, they often are dealing with overarching questions about the program. We've had a lot of novel questions this biennium. We have had to do a second rulemaking to clarify some of the low and moderate income issues. So that person has really spearheaded that area. So that's what we would use the positions for.
And Kathy, if I could jump in, this is Janine. When we launched the program last year, we actually relied on some expertise of other staff within the agency to help us do the rulemaking and everything. So we don't anticipate having to pull in other staff from around the agency to help with the program since it's already going. So we will just need this 2.5 FTE.
Right. You know, Alan just pointed out to me, if I maybe did not clarify, that the existing 2 staff that we have in the agency for the program now are limited duration. And so they are not moving forward to the 21-23 biennium. So we're not adding an additional 2.5 where, you know, it's the baseline. We will have no people for that program as we enter the 21-23 biennium.
Okay, and then one other question was, can you please explain again?
Unless we get our pop.
Yes, unless we get the bottom, that's right. A clarifying question, if you could explain again how the general fund going to the solar rebate program will share administrative costs with the other programs, and explain better why the rebate program ultimately reduces the ESA.
So, okay, now we have to get into the budget weeds. So the Department of Energy handles its administrative costs centrally. So, and you'll see this later, the things like IT costs, budget, procurement, human resources, payroll, accounts receivable, all that is centrally located in the central services activity. And so we pay for that by what is called the indirect rate, which we negotiate with the federal government. It's an official rate that says this is what the federal government is willing to pay for our administrative costs. And then we collect that same rate against all the other programs in the agency and all the other fund types. So all the fund types have to contribute and all the other divisions contribute. And that's how we receive money for our centralized administrative work here in this agency. So a couple things. So the solar rebate impacts it a couple different ways. Number one, it increases the number of program staff. We are not asking for any new additional administrative staff if we get this POP. So it increases our program staff. So that means that our indirect rate is driven downward because we're spreading that central services costs across more people in the rest of the agency. So indirect rate will go down. The other thing is that, as I said, all fund types have to contribute to this. So when we transfer the general fund over to our other funds, that contributes to our. Again, we don't change the central services. The central services amount is the central services amount, and so it's just there's just a bigger pot of money that it gets spread across, and so it will actually reduce the amount of money that the other fund types have to contribute to our central services costs. So it's not a direct impact. It's not it's not like saying, well, it's unlike the package 50, which actually moved some of the funding for these positions off of other fund and onto Fed fund. It's not that direct. It's an indirect reduction. Does that help?
Yes, thank you. It sure does. And that's all I have for now.
Okay. And if we need to talk offline about that, I am more than happy to do that.
The question now said that you got it, so thank you. Nice work.
Now we're moving to nuclear safety and emergency preparedness. And new items in this body of work. During the 2019-21 biennium, it became clear that the agency's responsibilities associated with monitoring and controlling the disposal of radioactive waste in Oregon needed to expand. It also became clear that the Oregon Fuel Action Plan was a flexible and valuable tool to address the needs of Oregon's energy sector, even during unanticipated emergencies like the pandemic. So this division or program only has 6 staff, which is about 7% of ODOE'S employees. They have extensive technical backgrounds, and while you can see that each of them actually fulfills a unique position, they do operate and work together as a unit. This is their budget. So they do not have DCRs. They don't have that activity level budget structure underneath this program, but we can sort of identify where their expenditures go. So Hanford dominates this division, and of course federal funds correspondingly dominate their funding, their revenue sources. Nuclear emergency preparedness is about 12%. Non-nuclear emergency preparedness is about 12%. That's the Oregon Fuel Plan. And then radioactive waste transportation is about 8%. And that is covered a lot in the fees area. Radioactive transportation is paid for with fees. They have some other fees that come in too. The general fund, the tiny slice here, that is coming in for the pot that we are proposing for this division. So this is ESA detail for nuclear safety and emergency preparedness. And it's about approximately 10% of this division's activities are supported with the ESA. And they're usually used to address shortfalls in federal funding or emergency preparedness and other radioactive oversight work that can't be supported with the Hanford grant or with fee revenue. So as I say, that includes the Oregon Fuel Action Plan, and during this current biennium, our oversight of the disposal of radioactive waste. So it's a small amount, but that is what it is directed towards. And that brings us to our second proposed policy option package. This is a very small request for about $80,000 in general fund to support staff work to monitor and enforce compliance regarding the disposal of radioactive waste material in Oregon. The discovery last year that radioactive materials have been illegally disposed of in the Arlington landfill has meant more staff time in nuke safety and emergency preparedness division has been spent responding to that situation and making changes to the program to ensure that nothing like that happens again. It has demonstrated that an enhanced program may be necessary going forward to keep fracking waste out of the state. Currently, this work is funded with the energy supplier assessment, and we think general fund would be a better fit. If this policy option package passes, it will actually directly reduce ESA. So do you have any questions about the projected revenues needed to fund nuclear, or what portion we estimate will be allocated to the energy supplier assessment?
We do not have any new questions at this time.
Okay. Let's move to our energy facility siting program, which provides energy facility review, compliance activity, rulemaking for both siting and nuke safety, and it supports the Energy Facility Siting Council. FSEC, the Energy Facility Siting Division, is primarily funded with fees paid by developers who are seeking a permit. The fees are set on a cost recovery basis and therefore are unique to each project. The division also receives revenue for monitoring and for compliance activity. So you see siting certification is the bulk of the expenditures. Monitoring is a small amount. Federal coordination is the smallest fraction. And then the support of the Energy Facility Siting Council is the second largest section. Fees make up about 70% of this division's budget, and ESA is about 30% under agency request. They have about 13 staff, or 16% of ODOE'S employees. And I think I've already described to you that what the various members of this division do. And these numbers include 2 FTE for a policy option package. So this is the energy facility siting ESA detail. And basically, ESA is used in siting to support functions that cannot be tied directly to an energy project, such as supporting the Energy Facility Siting Council and rulemaking activities. The fee payers do contribute to the general regulation of the program, but their contribution is capped at about as a percentage of their fees, about 35% of their fees. So they do contribute to that part of the division's activities, but it's not enough to cover all of the costs of those activities. This brings us to our third and final policy option package. As we did in the current biennium, the department is proposing 2 limited duration positions that would be filled to process applications and amendments and to address compliance work. So 2 different things. The positions would only be filled if siting division's workload required it. The positions would be funded with $487,000 in other funds, most of which would come from fees. $1,000. We are proposing this POP because we want to be prepared to address the needs of energy developers if there are new projects or amendments to existing projects without having the delays that would occur if we needed to get legislative approval for staff after the need is apparent. Oregon budgets down to the position level, so we do not have position authority. We cannot add position authority to our budget without legislative approval. So that means we are constrained at the but it has been hard to get on their agenda. So during the time of economic recovery, we don't want to slow down energy projects that could contribute to that recovery. And so that is why we are requesting this POP once again. So does anyone have any questions about the projected revenues needed to fund energy siting's budget, or the estimate that we are projecting ESA will pay for that budget?
We don't have any questions about facility siting yet, but we did get a question that I think is for Janine back for nuclear safety and emergency preparedness. And the question is why general fund is used. Oh, Kathy, are you there? Kathy?
I'm sorry, Jenny, that was breaking up.
I think Kathy may be having
Yes,
technical
ma'am.
difficulties. Kathy, can you hang on a second?
Uh-oh. Yes,
Can you hear me?
I can hear you, Jenny. Can you hear me?
You're breaking up. Okay, I can hear you now. You are breaking up a little bit, and I think you must not have heard me mention that we do have one other question that came in.
Please.
So before you go forward. Sure. Okay, hang tight a second. I think the question is probably for Janine. And the question was why general fund is funding the radioactive waste disposal program and not fees for those who dump the waste.
Thank you. Really good question. This is sort of a new issue for us. This issue came up in February of last year when we discovered that there was an entity that was illegally disposing of radioactive waste in the state. And so we haven't had time yet to fully examine the process and what we're going to need for this program and what the funding mechanisms might be. So for the next biennium, we do have this general fund request, but we'll be undertaking a rulemaking. We're currently in rulemaking on enforcement and penalties. And then if we get legislative authority in the next session, we'll undertake a rulemaking on the program in general. And during that process, we hope to identify the appropriate funding source. And it may be that there are some fees that we can tap into to pay for that. It's not a large amount. It won't take a lot of staff time, but there is going to be some time devoted to it. And I'll actually maybe check and see if Ken Niles, who's head of our nuclear safety division, has anything to add there.
Yeah, thanks, Janine, and thanks for the question. The part of the answer as well is that the intent of the state statute is not to allow disposal of radioactive waste. So there should not be an ongoing disposal for which we could charge fees. As Janine mentioned, that we are currently in rulemaking to address our ability to assess penalties. So in this case, we're reacting to something that has happened in the past. We're hoping something like this will not occur in the future.
Okay, that was the last question for now.
All right.
But,
Can you hear me now, Jenny?
Yes, you sound better now.
All right. Thank you. This brings us to our last program, Administrative Services, which has 2 activities and provides a wide range of agency-wide services and resources. The Director's Office officials. We have 8 staff in this activity in our division, and which is 10% of ODO employees. This is the Central Services team. Central Services employees handles payroll, contracts and procurement, grant management, accounting, information technology, and other agency-wide services. The budget for the Human Services is in Central Services, although it reports to the director. It's also important to note that the agency-wide resources like rent, IT equipment, state government service charge, office supplies, all that sort of thing, normally all are charged into Central Services rather than going out to the different divisions. Sources for services, and they're basically a mirror image. Central Services is funded with indirect. 75% of this division is actually in Central Services. The Director's Office is about 25% of the division. ESA supports the Director's Office, about 24%. There is a small amount of federal funds in the Director's budget that comes from the State Energy Program grant. This is the estimated ESA expenditures for the Administrative Services Program. Combined for the whole division, it's about 66% of the budget. I also want to point out that, well, let me look at the next slide. So this is the Director's Office and Central Services. So it's that next budget level down, separated out. I mentioned to you that P&I's budget had increased because of the shifting of certain positions over into P&I, and you see that here, the other side of that here. In the director's office, which is where the positions used to be, you actually see almost $700,000, $800,000 shift downward, despite the inflationary increases. The director's office personal services budget is down about $800,000. So, you know, I just want to make sure that you understand that it's sort of a put in take in this budget for those factors. So to return to the ESA, you notice the ESA estimates are different for each sub-activity within this division program. The director's office is funded with the ESA, and central services is funded with our indirect rate that I was talking to you about before, which is paid by other programs and all fund types. Well, in our actual budget, ESA funding doesn't directly appear in central services. Nevertheless, we estimate that it contributes approximately 55% of the revenue that is drawn into central services via the indirect rate transfers. So this is in line with our operating budget revenues. So do you have any questions about the projected revenues needed to fund the administrative services budget, or what the portion of that we estimate to be used from the energy supplier assessment?
We actually had a good question that is probably for Janine. And the question was, because you were a small agency, have you considered contracting with another small agency for some of the central services like payroll or HR?
That is an excellent question. A similar one was asked by the Ways and Means Committee in our budget note. So we did look at that. We looked at 3 service areas: financial services, information technology, and human resources. And we selected those because DAS, or Enterprise Information Services, currently offer some of those services to other agencies. We did an assessment and determined at this point the places where we could find savings by contracting out those services, like some of the IT, we already do. Other areas, we would not find savings by doing that. And if you would like more details, I would refer you to my February 24th presentation of the Ways and Means Committee, which is on the budget website, or you're welcome to follow up with a question afterwards. But yes, we looked at it and did not find any savings associated with contracting out. And I think there was a question about whether these slides would be online, and the answer is yes. In fact, they're already up there on the ODO website under About Us. There's a budget website that has this presentation and the Ways and Means presentation from February 24th.
And I just sent that link out in chat, so everybody should be able to see that link.
Thanks, Jenny.
And I believe we are caught up on questions for now.
Okay, thank you. So last month at the Energy Advisory Working Group, we showed you a similar slide to this one, which showed our ESA budget and an estimated ESA percentage of that budget. So I'm now providing our agency request budget by program and activity with the estimated contribution of ESA revenue for that budget. So as you can see, in some activities, the ESA pays significantly. In others, the contribution is lower. But this is really just a summary of what we have gone through on each of these slides. And I do want to highlight that this is a budget. A budget is a forward-facing projection of what we believe our costs will be in the next biennium. It is not a plan, and it may not, it is a plan, but it is not set in cement. It may or may not roll out the way that we anticipated. I don't think anyone thought the 1921 budget would roll out the way that it has done in the last 3 or 4 months. So I just want to caution you, we want to provide you with these. These are our best estimates at this time, but it is not a guarantee that going forward, this is what will occur, both because we will be going through the budget process, but also because things change. So our ESA assessment, we anticipate, and under agency request budget would be $15,639,000. That's an increase of 1.7, a little less than $1.7 million over the biennial assessment in 1921, and the percentage increase is about 11.9%. We did want to touch base with you on our 10% reduction options. In every agency, every biennium, we're required to submit a 5% and a 10% reduction option list along with our agency request budget. The reductions are taken from the agency's CSL budget minus debt service, and they're broken into two buckets, 5% and 10%, and then they're divided by fund type. So these reduction option lists are done for other funds, Fed funds, and lottery funds. This slide shows that what our targets are by our divisions, and at 10% and at 5%. So this is our current service level budgets minus our debt service and pass-throughs, and these are our targets, again, by division and by fund type. These are cumulative targets right here. We are working on our reduction list right now, but it is clear that these are going to be very difficult reductions for ODO and that they will impact filled positions. So that is, I think this is not something that we always talk about, even though agencies do this every time, but in the current budget climate, it feels very much like these could actually be put into operation by either the governor or the legislature.
Kathy, let me interrupt you just for a second. We had a couple of questions that just came in. There's one question about if this reduction list will be made available for stakeholders to see.
It will be submitted with our agency request budget on July 31st. And there we fill out a form, and it is in our budget binder on July 31st.
Great.
That's publicly available, right, Kathy? Will that be on the DAS budget?
We will post it on our ODOE'S website. We're required to post our agency request budget on ODOE'S website.
Great.
And another question just came in. How would the 5% and 10% reduction budgets affect the ESA?
Well, as I say, we're not done yet. So we're still ranking and refining, and that is an important element of this. But I've done sort of a back of the envelope calculation, and if either CFO or LFO decided to elect all of these reductions, it would reduce expenditures supported by ESA by about 1.6 million. But again, that depends on a lot of things. I mean, these are not reductions we are proposing. These are reductions we are identifying to assist CFO and LFO in the event that they need to make reductions to our budget. So it really depends on what they decide to do.
And then for Janine, I think, did ODO consider cutting FTE in the formation of the draft budget?
Thanks for the question. We worked on the budget according to the prescribed process, which involved coming up with current service level and then adding agency policy option packages, and reductions in FTE are not part of that process. However, as Kathy mentioned, the required reduction option list that you see here would include some reductions in FTE if they were all to be taken. This is an exercise we go through every 2 years to put together this reduction list. Some agencies are big and are able to put vacant positions on that list. We can't do that. We can't get to 10% with vacant positions because we cut all of our vacant positions, or most of our vacant positions, in the last biennium. And I see another question about what other funds are. So other funds, Kathy, correct me if I'm wrong, do not include general fund. We don't have any general fund in our current service level budget, so there isn't general fund to cut on the reduction targets. Other funds includes the ESA, but also includes
Any fees?
fees for services we get. Yeah.
Right. So we always define other funds sort of negatively. Federal funds are federal funds, lottery funds are lottery funds, general funds are general fund. Other funds is any other money the state gets from any other source. So it's a very, very, very broad category. But yes, ESA is part of other funds. I want to make sure that people understand that the ESA assessment that we are projecting for our agency request budget is a biennial number. So the 15.6 is a biennial number, and the percentage increase is 11.9 over the biennium.
So Kathy, there was a follow-up specific to that, actually clarifying that, so a 10% reduction would almost cancel out the proposed 11.9% increase from personal services.
Pretty close. Yep, it would come pretty close. But again, that's that we have not finished our list yet, and those were my, as I say, back of the envelope calculations.
Yeah, I think it's a good observation. The thing that this doesn't include is any cuts that are made statewide. So as we talked about before, if the legislature or the governor decides to put all state agency employees on furlough, or get rid of some of the cost of living adjustments and merit step increases that they put into effect last biennium, that would also affect our budget and decrease the ESA, and that would also decrease our current service level. So a 10% cut would be less. I mean, there's so many inputs into this that aren't determined yet. But I think, yes, the back of the envelope calculation is about 10%.
So, and we're heavily focused on ODO here, but the biennial budget process is very much a statewide process, and the revenue forecast is very much a statewide process. And so we have our own budget, but as Janine points out, the type of revenue challenges the state is facing are more likely to be addressed at a much more across the board level.
And even though we're not a general fund agency, they like to share with all the agencies those impacts.
Yes, historically they have. So I do want to just give you, I know you've seen this in the past, but just an updated energy supplier assessment background, a few slides on that. But before we do that, do we have any other questions on our agency request budget, the projected revenue we're going to need for that, and what amount we propose to allocate from the energy supplier assessment to those programs and activities?
It looks like for now we are caught up on questions. Thanks, Kathy.
So this is the ESA history. This is a very busy slide. I just want to orient you a little bit to it. The bars, the gray, brown, and green bars, are the energy assessment, and they are in millions of dollars. The axis is over here on the left. The lines on the right, rather. The lines are are in billions of dollars, and they are the gross revenues reported by the energy supplier assessment payers, and that axis is over on this side. So as you can see, there's not a really strong correlation between the level of gross revenues reported by energy suppliers and the level of the assessment, and there should not be. We assess based on our legislatively adopted or approved budget, and the revenue needed to support that budget after all other revenue sources are accounted for. The maximum percentage ODO could assess is 0.375% of the gross operating revenue subject to the assessment. In our most recent assessment, the rate was 0.117. The rate in 21-23 will depend both on the energy supplier's gross revenues and on the legislatively adopted budget. I did look at what the rate would be if we assessed our agency request budget based on the gross revenues reported in 2019, and our rate would be around 0.131. So it would be slightly higher than it is in this year of the assessment. So this is a very busy slide. Do you have any questions about it?
Nothing has come in yet.
Okay. This is a much simpler slide. This is telling you what the energy assessment was over the previous 10 years. As you can see, it's gone up and down. So it goes up and down and up and down. The ESA dropped about 8.6% between the 17-19 and the 19-21 biennium. The 21-23 biennium is really returning to the same level as it was in 17-19. But as noted, it would be an increase over 19-21. So what's...
Hey, Kathy, can I interrupt you for a second? We just got another question that came in. Can you please repeat information about the statutory max and the calculation?
The maximum percentage under statute ODO could assess is 0.375% of the gross operating revenues subject to the assessment. I'm sure you're aware the energy suppliers report their gross revenues, but then we reduce those gross revenues by inter-utility cells and the revenue that is subject to the gas tax under ODOT. In addition, we reduce any supplier whose assessment is less than $250. We do not assess. We do not send that out. So that's the adjustments that are made.
And Kathy, I think the question was, so then what was the percentage under this biennium and what was your calculation that the percentage would be under next biennium? Should the ESA be what we projected and the utilities revenues be what they were in 2019?
Okay, so in the first year of this biennium, where you are reporting your 2018, we refer to it as a 2019 assessment, is based on 2018 gross revenues. The rate was, the percentage of the assessment was 0.117. In 2020, it was 0.00120. And or I may have those reversed, sorry. And then in, if we used your current gross operating revenues, which I realize may not be what you report in the next biennium, and applied our agency request for budget ESA assessment, the rate would be 0.131.
So 0.13 and the statutory max is 0.375.
That's correct.
Okay, thank you.
And we come back, and again, the rate, it looks very much like it did in 2017, when it was 0.134. So to recap, this is the process we're going to use. The next step is we're going to submit our budget on July 31st. We will be posting on our website, as I mentioned, at that time. We hand it off to CFO. The governor will be working with CFO on her budget, which is due around December 1st of 2020. That does have to be a balanced budget. It's handed off to the legislature and LFO. The legislature will begin, will go into session in February, around February, and then we will be called for hearings in front of the Joint Ways and Means Subcommittee on Natural Resources. There will be the ability, there's always public comment opportunity at those hearings, and in both in person and electronically, or at least we hope there will be. Changes can be made at the governor budget level and at the legislatively adopted level to our specific budget. But in addition, I want to remind you that the legislature usually does end of session bills that impact a wide range of agencies. And so ODOE'S budget will not be fully finalized until the legislature adjourns for the session. So these are a few resources. In case you had questions about what I mentioned, we have what we call our budget instructions, our budget glossary, Oregon's budget process, and then our website where we will post our information. So do we have any additional questions?
We don't have any additional questions for now, but what we can do is unmute everybody if anybody wants to jump in with any final questions or comments. Before I do that, Kathy or Janine, do you want to add anything?
No, I'm fine, Janine.
Okay. No, that sounds great. Jump in alphabetical order. Just kidding.
Okay, so everybody please be warned, I am about to unmute you. So if you do not want to be unmuted, please go ahead and remute yourself. And it might be a little bit of a free-for-all, but we'll try to take people one at a time. So, hang tight, and I'm going to unmute everyone.
Mom, my mic is super duper.
What?
Christy, how are you? Hey.
So this is Peggy Lynch.
So Jenny, I have a question. Should I stop sharing, or are we going to want to go back to slides?
You know, maybe leave the links up for now in case people still want to follow those. But I think I just heard Peggy Lynch had a question or a comment. So Peggy, why don't you get us started?
Thanks. I really just wanted to say thank you. Excellent presentation. Miss seeing you elsewhere, Kathy, but it's obvious you're doing a great job at ODO. We will be very interested in following both your POPs and how the Global Warming Commission can connect with the climate change work that's being done. So thank you.
Thank you, Peggy.
This is Angela from ASEA. I have a question on the solar rebate fund. For explaining the 2.5 FTEs, I'm wondering if would there be less need for those 2.5 staff people if it took longer to issue rebates, or I mean, are those the 2 FTE that are processing the rebates? Is there that many staff just because you're trying to do things in a particular time frame? Or I realized there was a lot of volume of projects, but it was still pretty constrained by the amount of money available.
Good question, Angela. And I mean, I think you have a good point, because one thing that we have noticed is that it sort of bunches up. You know, it's not a very sort of smooth process, but that is what we are hoping to address by making this a longer process, that maybe people won't feel like, because it's sort of ongoing, that people won't feel like they have to rush to get into the process, and then we are faced with a huge mountain of work and we have to put everything else aside. So you know, at this point trying to juggle application approvals with inspections, with issuance of rebates. You know, it would be easier if we had a longer time frame. So I have to admit, you know, as we just tried to build the package as closely as we could to what was provided to us in this biennium. It's the administrative costs are slightly less. We didn't double them, but it was mostly bringing down costs like IT costs, hopefully AG costs. So, like I say, I think our main goal was to say, you know, we can continue to do this program, and it would look very much like, you know, what you first proposed.
So Kathy, we got another written question that just came in. And the question was, how does ODO handle passage of federal legislation that rolls out funds for energy programs that can impact the budget if they happen between July 31st and December 1st, or also after December 1st? Which is a very good question.
So, it really depends on when it occurs during the budget process. So if we were, so say for instance, there was federal legislation that came through the state energy program that suddenly increased funding for ODO by $10 million or something outrageous. So we can work with the governors. If we are in the governor's budget section of this process, we could work with the governor to insert that sort of thing into the governor's budget in a package in the governor's budget. We could also work with the LFO if it happened during the legislative session to insert a package into ODO's budget. Both CFO and LFO have their own package numbers. They can use them. We can work with them to do that. If it happens after our budget has passed, so after July of 2021, then it does become a little more challenging because then we have to wait for the short session to ask for additional position authority or expenditure limitation authority based on this new federal funding. But remember that we already have federal funding. I mean, we're actually facing that right now, is that our federal grant, our new federal grant this biennium, we don't technically have that limitation in our budget. So we are sort of in effect spending down our other federal limitation to implement that program. And that's why we're hoping in the emergency board, they will give us our real limitation. So it's, you know, it's really a game of strategy about when exactly it becomes clear that there will be additional federal funding and how we handle it from that point.
Great. No more written questions have come in, but anybody else, please feel free to unmute yourself if you have a question or comment.
This is Angela again. I have another rebate question. Apologize for taking up all the question time. So you said that part of the 2 FTE was for inspections, and I wonder if you all had considered either doing remote inspections in the way that the Energy Trust does or contracting with them to do the inspections. I see Janine nodding, so I'd love to hear the answer. Thanks.
So the kind of remote, we did look at the system that ETO uses to do their remote inspections, and it was probably more than we wanted to spend for a pilot program. It was a fairly significant IT cost for the program. We have reached an agreement with ETO to, in some cases, rely on their, you know, when a project has both rebates on it, we will rely on their inspection to say it's good with us. So we're not actually inspecting every single one of our projects. We're inspecting just a certain number of them. And then finally, we did develop a remote protocol that involved contractors going out to do video, but that became very challenging in terms of the transfer and storage of those videos because, you know, we have open records laws. It requires us to retain these, you know, this is a document. It's an auditable document. That is, we audit on the basis of the document. And so we have to retain it for a lot of years. So but if it were a permanent program, then the IT technology for remote inspections might become a more viable alternative.
But Angela, the reason I was smiling is that, you know, this is not something that we anticipated wanting to address in this program, remote inspections, because we didn't realize that we were going to be needing to socially distance and have these additional protocols in place, but is something that Kathy and her team have really, working with partners like ETO, been able to get out and do inspections and do some virtual inspections, even under the current situation.
Thanks. I mean, we did talk to the staff before the pandemic about the possibility of remote inspections because, of course, ETO does that now and did it before the pandemic. I'd love to follow up with someone to get some more information on the percentage of projects inspected. So I'll follow up. Thank you.
Great.
Anyone else, please feel free to jump in. No further written questions, but I'm going to keep an eye on the chat.
Well, while we're waiting, I'll just say thank you again for your interest and your attention through the last very scintillating hour and 45 minutes. And thank you, Kathy, for walking us through the budget. It's an arcane and complex process that we go through every 2 years. Just reminder that we have posted all of this information, the slide presentation, on our website. And if any additional questions occur to you, please go ahead and email askenergy@oregon.gov. Let us know if you have additional questions. If there's any other information that you would like for us to provide on our website, or excuse me, on our budget, we're happy to do that. And I know we got some specific questions in the chat, and we'll follow up on those for a few specific items that people want to see. And you're welcome to submit comments on our budget as well. We'll post everything that we've received by July 24th. So if you want it to go up there by then, please send it our way. And maybe we'll just keep the line open for another few minutes if people have any additional questions. But if you don't, thanks again for joining us. And please continue to engage in our budget as it goes through the process with the governor's office and the legislature. Now Kathy and I will sit here and awkwardly stare at each other over the video. Okay, I'm going to go ahead and assume that no one else has any questions, and we can wrap this up. All right, thanks again, everybody.